everybody. I'm Julie Hyman from Yahoo Finance. I'm very excited to be hosting this panel today. I knew it was called The Voice of God, but that's just because I'm in the biz. So let's get straight to it, guys. So I want to introduce our panelists, and you guys know their names. You have them in the app. We have them behind us. But what I really want them to do, first of all, to sort of situate us, contextualize us in this conversation, is to describe a little bit about what they each do, what their job actually is, and maybe a little bit about who their clients are, so you can get an idea of where they're coming from as we go through this discussion. So I'm going to start with Marlena Lee, Dimensional Fund Advisors Global Head of Investment Solutions. Go ahead.
Thanks. Hi, folks. So I've been at Dimensional for 16 years. I run a team called Investment Solutions. We're really here to help our clients understand all of the aspects of investing. So we have a team that really has analytics and allows our clients to deep dive their asset allocation, think about the trade-offs involved with, for example, incorporating things like size tilts, value tilts, how does that play with profitability? That's part of the team. We run a team of strategists. We do a lot of our thought leadership. So basically any question that our clients are asking us about that's specific to investing, that usually finds its way somewhere into my team. Dimensional, we have a very, I would say, unique view on markets. We've had it for our entire time we've been investing, so over 4 decades, and it's a very market-based philosophy. So we don't think that we can pick stocks, we don't think that we can time markets, but we look at markets and we think that we can use academic research in order to build portfolios that aren't rigidly tied to an index and instead are designed to outperform them, and we do have 4 decades of doing just that.
And your clients are mostly, are they pretty diverse? Is there a size that you usually fall into?
Super diverse, so financial advisors, independent, all different types. Certainly we work with your traditional institutional clients as well. So across the board.
Steve.
Hi, everyone. Steve Kaplan. I'm with JP Morgan Asset Management. I lead a team called Customized Managed Account Solutions. There's 3 different things that we do across the team. We are responsible for our separately managed account platform, responsible for model portfolios. Those are off-the-shelf models or custom models that we can build in partnership with people like yourselves. And then similar to what Marlena was describing, we have a program called Portfolio Insights, which is a program where we help advisors with portfolio construction and investment selection. We have a team of specialists. We also offer digital tools. And the goal is to really help you shape your portfolios, help you identify risks, as well as think about the opportunities that you have.
And Dana.
So I'm Dana Dioria. I'm the co-CIO and group president of solutions at Envestnet. Envestnet is a wealth tech platform that hosts many asset managers, including Dimensional and JP Morgan, who I'm happy to be on this panel with today. We have about 800 managers on our turnkey asset management program. Many of you access your investments via us. I run the TAMP as well as the asset management solutions, so our in-house solutions like direct indexing, tax overlay, et cetera, but also all of our partnerships with these fine managers and others.
Great. So again, to sort of offer context as we talk about outsourcing and all of the services these guys provide, I think it's worth noting that it was not always this way, right? There's been a huge growth in the industry, but also there's been an expansion in what you all are expected to provide for your clients. It used to be that they would come to you for financial advice. You would help them pick investments, and that was pretty much it. And now there's sort of different and larger expectations. So for you guys, I just wanted to talk about a little bit about that evolution, why it's happened, over what period it's happened, and sort of what client expectations now are. Dana, why don't we start with you for this one?
Sure. I think, well, I think you said it, right? Like technology has changed the landscape completely, and that's, nothing revelatory. I think, I talk to many advisors, obviously, in my position and even at, my previous job. And really, at the end of the day, I think a lot of advisors have been personalizing all along. So to say, something like personalization, for example, is new to them is, kind of is dissonant to them. I think the big thing that tech is bringing is the ability to scale that personalization. I was just talking with an advisor at one of the breakthroughs who was telling us how he trades everything through spreadsheets. I just felt bad through the whole conversation that this man is trading everything on this spreadsheet, and like, he's awesome at his job, clearly, but, think how much more powerful he could be with tech. Tech has, and that's like, those are table stakes types of things. When you think about what you're able to do with technology today, so think about something like tax overlay, right? Every single movement in the account is done in a tax mitigated fashion. You just can't duplicate that with, kind of the human touch, right? The human touch is much better used for being with the client, spending time, communicating, looking at the overall asset allocation. But things that scream out for algorithms, I think that's where tech has come in and just raised the game, frankly, for everybody.
So I maybe just to expand a little bit, I think I empathize with you all that are the advisors, because I think that everything you just said is very true, but I also think the job's gotten a lot harder, right? Like, all your clients, because of tech, they're getting real-time information, and they're asking you questions about things they probably didn't ask you about 10, 15 years ago. There's also the evolution of product because of technology, right? The business model portfolios is a good example. Model portfolios used to be mutual funds only. Then it was like, maybe I'll sprinkle in some ETFs. And now the conversation everyone's talking about is UMA, right? How do we think agnostic to structure? How do we build portfolios that have ETFs, mutual funds, separately managed accounts, ultimately private alternatives? And so I think there's the benefit of technology in terms of what it can do and how it can make lives easier for clients and for you all, but there's also a challenge of information that you have in terms of clients asking and demanding more.
You're hitting on what trends we've been seeing and why we're even having this panel. And I do think that there's been a trend, or at least I've seen it in a lot of advisors that I've spoken with over the years, is what is the value of their advice to clients, and how much of it is based on being able to select the investments and being able to get in and out of different things, versus how much of it is really understanding their clients' long-term goals. I mean, they have their clients' dreams in their hands, and how much of it is more around the financial planning and building a portfolio that's designed to last through all types of market environments, such that they can focus their time, instead of really focusing it on the investments, being able to partner with folks like us and being able to outsource their investments to an asset manager or to a model delivery program, so that they can free up time to spend on where their clients really want to hear from them, that they understand their clients. So it seems like the best advisors are ones that don't even talk about the investments, and outsourcing the investments is the way to do that.
And Dana was talking about data, so she brought some for us to take a look at, which is sort of, if I can get it to work, which hopefully I can. I don't know where I'm supposed to point the clicker.
I think probably just the green.
Oh, there's a disclosure first. And then, in any case, the idea is that hit back, maybe? No? Aha!
Do that one.
This is the one we're looking for. Okay. So the idea here is to illustrate through data what the difference is in outsourcing versus non-outsourcing. And since Dana brought us this, so this sort of defines, as you can see here on the left purple bar, heavy outsourcers versus other firms. And so Dana, what is a heavy outsourcer?
Yeah, I'll say this is a study from our friends at Fidelity. This is their RA benchmarking survey. I don't know what the exact definition is, but they went across with this survey and said, okay, and this is again, like, nothing hugely revelatory. I did think that, seeing all of these different places, client growth, operating margin, AUM per client, asset growth, was pretty overwhelming. But I think, look, there's kind of this saying, like, the correlation between having a CFA as an advisor and earning a lot of money is actually negative, right? Because you spend all your time doing the investments as opposed to actually servicing new clients, maintaining the clients that you have. And really, of course, that's just what this survey is telling you. And it's that if you're spending your time individually managing investments, it's taking away from your ability to grow your business. I think we have another slide actually that I'd love from our own Trulytics department from Envestnet. I don't know if you can pull it up. I'll give you the. No, it's maybe one more. Yeah. So Trulytics is an Envestnet firm that basically looks at succession planning for RIAs and helps with valuation for an RIA. And not surprisingly, outsourcing is another thing that you can do as an RIA to raise your valuation, because if you as the advisor are the PM, the star PM, then where goes you kind of goes the value of that company, right? And so what is the value of the RIA to a buyer if you have to come along with and you're not going to be there forever? You can't hand that off. And so, Trulytics they do fantastic work, but basically what you're seeing here, same kind of similar idea, where if you have accounts managed by the advisor, the valuations tend to be lower versus you're outsourcing those accounts.
So if you make the argument that outsourcing is effective, that it increases the value of your firm, I think the next question is, if you're an advisor, where do you begin? How do you figure out what you're going to outsource? Where is your money best spent? Where are you going to get your ROI? So what questions should advisors be asking themselves and people like you to try to figure that out? Marlena, why don't we start with you?
I think the number one thing to start with is, do you have an investment philosophy? Like, are you investing in just the markets? Do you think are you trying to find a manager who's going to deliver alpha? Are you trying to, do sector rotation? Whatever it is, I think that's one type of philosophy which will necessitate you to find, either do it yourself if that's part of what you think your value add is, or find a manager that you think you can identify to deliver that. Another approach would be to, like a lot of our clients are, we trust in markets, and that's a completely different investment philosophy that really frees up the time to focus more on clients. So I would absolutely focus on, okay, well, what is my investment philosophy? And then finding a solution that matches it, and then figuring out how to dedicate the advisor's time and align it with where you think you can add the most value. What are the things that your clients actually want to hear from you about?
Steve?
So I think the simple question is ultimately and by the way, there's all different shapes and sizes of RAs, right? So everyone is going to have a slightly different business model, but I think ultimately it's what is your core competency, right? Some are going to focus very much on asset raising, some are going to focus on investments, some are going to focus on client service, some have teams that are big enough to do all of that. And so I think it really, really depends on what you want to focus on, what your core competency is in terms of a value proposition to the market, and then making decisions from there. I do agree, right, that investments, while we often do talk about them being commoditized in the world that is far more outcome-oriented than it used to be, like thinking about how you want to represent yourself, and do you want to do everything on your own, or do you want to partner with a number of firms or a series of firms to do your investments or to build your portfolios? I think it is an important question from a value proposition perspective.
Yeah, the only thing I would add, I think both answers are spot on. And I would just say, if you've looked at something like outsourcing, or you have a certain view about outsourcing that might be, you haven't checked on it recently, I would just invite you to, kind of look again. I mean, you're obviously in the right place to do it. One thing I've kind of heard repeated, a theme that I hear a lot recently is, actually advisors have been pretty good at cobbling together different pieces of the puzzle. So I've got the best of this, and I've got this thing, this tech over here doing this for me, and this tech over here. And it's becoming a little bit difficult as an advisor to actually stay on top of all of the different tech solutions. And then, do they play nicely in the sandbox together? So one thing I would look at, and that we stress, is you can do a lot with a single ecosystem. And that ecosystem, you can have an on-ramp to that ecosystem in a bunch of different ways, whether it's investments, trading, whatever it is you want to outsource, billing, et cetera. And then from there, you solve a problem, but you solve a problem with an ecosystem that as you grow, they've got all the rest of the pieces. And obviously Envestnet, I'm going to be biased. Envestnet's the one I would recommend. But you have options here, right? And that's the piece I would say to you as far as outsourcing. Don't think of outsourcing necessarily as something where, it's this yes or no. It's the piece that I don't want to outsource. There's actually, there's a lot of ability to outsource pieces of the puzzle to a place that as you grow, you can expand and go into the different next concentric circle of services that you may want in the future as you get bigger.
Do you guys want to, Steve, you look like maybe you want to say, okay. Well, I did want to ask, well, first of all, I'm going to try and advance this again so that it's just to a, there we go. Okay, good enough. I was going to ask you to expand a little bit about technology because, you sort of went there already, Dana, but I guess I would ask Steve and Marlena this as well. If I'm an advisor, why not, subscribe to a particular software that's going to help me with one thing, contract with a fintech firm that's going to do something else? Are there advantages to each kind of, to a sort of a la carte, build your own versus that holistic way that you're talking about? Do you guys want to take that, Marlena, first?
Yeah, I think it's always a set of trade-offs, right? So if you're working with a vendor or a technology, there's always costs to incorporate it into the business, making sure that you're monitoring it and that you're getting what you need out of it. So that I think is the major cost. Thinking about that short-term cost versus long-run efficiencies that it gives to you, I think that's always the trade-off with the adoption of any technology. And from a dimensional perspective, we're happy to, and in building models, we're happy to do it in lots of different ways. So we work with a lot of advisors just on, they're still managing how they're going to trade their models, but we're happy to come in and run analytics to help them understand how they want to make the trade-offs to build their model, and then it's off to them. Where there are advisors who are, it might not be for all clients that they'll want to use an SMA, but for certain types of clients, they may want to outsource some of the portfolio management if we're talking about an SMA. There's model delivery, which is just another aspect to it. So there's lots of different layers, and it really is, it seems like it comes down to there are certain advisors where they have particular cases where one scenario might be relevant, but it's almost like more at the client level is what we're seeing as opposed to overall firm levels.
So maybe I'm pivoting a little bit, but I think one of the things that we collectively talked about was outsourcing can often feel like a bad word, depending on your viewpoint. I think what we're really saying across the board here is that when we think of outsourcing, we're really thinking of partnership to help bring scale and efficiency to your practices. And it's really about how you want to build your practice and the choice that you want to make in terms of you're not really ever fully giving up control across the board, right? So especially from an investment perspective, when you think of what we were just talking about, if you're building a model portfolio or a custom model portfolio, that's done in partnership with you, right, as an example. Or if you think about scale and efficiency, you ultimately are going to choose the investment from an SMA perspective, but there are some RIAs that we speak to that either have to hire people towards the end of the year to do tax loss harvesting, and it's done manually, or they have in-house staff that are literally sifting through and looking at individual tax lots. And I think what we're collectively saying is there are systematic approaches that can help you with that. And that tax loss harvesting, as an example, it shouldn't be a once-in-a-year thing that has to be done manually. But whether you call it outsourcing or you call it a partnership, there are tools, there is technology that will enable you to look at tax loss harvesting on a daily basis on certain products. And the onus is not on you to go in and identify the tax lot and take advantage of that loss, but actually allow a partner on the asset management side or on a platform that can do that for you to take advantage of that so you can have more scale and efficiency in your overall practice.
So I guess that brings up another question, which sort of goes back to what I was saying about, where do you begin? How do you figure out what to do? Can an advisor come to you guys and say, I don't know where to begin. I don't know what to do. Can you come in and just sort of evaluate, like take a holistic look at my business and tell me where there are, not what am I doing wrong, where are there opportunities for efficiency like what you're describing? Where am I leaving my and my clients' money on the table that I could be taking advantage of?
I mean, I think fully from an investment perspective, absolutely, right? There's always opportunities to identify risks and opportunities for return, which I think is what both of us are talking about. In terms of like end-to-end review of a technology platform or a full tech stack, I would say there's probably some insights that you can glean from asset manager and asset manager partners, but it probably falls more into Dana or other TAMP's wheelhouse in terms of what are you trying to achieve and what makes the most sense. So I don't want to speak for you, but.
No, I mean, but thank you. That was awesome.
Okay.
I really appreciate that. Yeah, 100%, InvestNet will go through sit down with you, analyze, and when I say analyze, I mean talk, right? Hear out what your pain point is. We have many different technology sets, as I said, that are on-ramps to a fuller ecosystem, and you kind of choose, where you want to be in that ecosystem. So, the question is the answer. You should go in with that, right? You should go into that discussion asking that question, what can you tell me? Here's my business. Here's how I'm running it today. You've seen many, many other businesses, in my position. What's going to best help with the needs that I have? And I think, 100% we're absolutely here to do that. I think of like a DFA that's got a storied presence in the RIA space, obviously JP Morgan as well, just, very strong names, and those, and their managers on the platform as well. If you have a partner you trust, it's interesting, right? Because managers are getting more and more into that space as well as on-ramps to these technology capabilities. And in the same way that, we have an investment arm, the investment managers are more and more coming into the space and being able to offer that kind of insight into the technology capabilities as well. And I say that to say to you that it's just transformative, right? I mean, we're at a stage now, and I know all of you, I'm sure all of you have been hit with a million pitches while you're here on technology. But if you have, what I would say is one thing, yes, 100%, come to the InvestNet booth. We would love to talk to you about what your needs are. Number two, if you have a trusted partner, I can almost guarantee you that they will help you figure out how as well to kind of start solving some of those problems.
We have about 6 minutes left. I just wanted to remind you guys, we will have a couple minutes for questions. So there is a Slido that you can, we have a question already. All right. I think we can just go to you guys okay with going to the questions already? Let's do it. All right. And this is a good question. So what factors should advisors consider when deciding whether to keep investment management in-house versus partnering with external providers?
So I think the answer is potentially D, all of the above, depending upon how you want to think about it. And it goes back to what I was saying earlier. I think a lot of times in the world of custom models, it's thought of that you're completely seizing control and that you're just completely outsourcing it. Now, you can do that. You can go and you can say, models are built. I'm going to just go and I'm going to be the one that kind of services clients, prospects for new clients, and I'm not going to have investment management as a component of what I do. I'm going to leverage asset managers or home office models or whatever it may be as a way to really drive asset management on the platform. That's one decision that you can make. And I think it really depends on where you want to focus, the size of your business, and so on. The reason I say it could be something else is that in the world of custom models, it's kind of like being a co-pilot, right? We're not sitting here as JP Morgan telling you exactly what to pick in your portfolios, exactly what that asset allocation should look like. We are building it for you. We have views on the markets. We're thinking about where there are opportunities, where there are risks, but there might be certain products that you have an affinity towards that are not our products. And that totally makes sense. That's okay. You can say, I'm really interested in keeping these 3 funds. They're core to my client base. But if you can help me with asset allocation, if you can maybe use some of your strategies around this, then that would be something that I would want to do in terms of, again, that's not full outsourcing, but partnering on building a portfolio. So it really is about how you think about asset management and what you want it to be within your business. It's not just one answer. It's your comfort level and your business model.
Well, and I guess, but what criteria should people be using? Is it about whether they should build it in-house or not? Is it whether they can find a firm that matches with their philosophy at all? Is it cost? Is it, what should they be weighing when they're trying to figure this out?
A couple things I would say. First of all, the size of the advisory firm, how much you're looking to grow, how much time, you're trying to free up. Again, I'm going to just speak from my bias. It's almost impossible in my mind to believe that there isn't some way that an outsourced and especially now because you have so many different ways of accessing outsourcing nowadays. So, cost can be very minimal depending on, you could be using, portfolios offered by a particular asset manager, and then, really the cost is the cost of the client. And if you were going to use that asset manager anyway, you're kind of getting the benefit of both. I mean, there's a lot of inroads into outsourcing that doesn't require necessarily an explicit fee even. I mean, in some cases it may, but you can wade your way in. So I would say as a starting point, part of it, I think the hurdle more than figuring out, am I a candidate? The hurdle is, do you have the time to actually assess these different things? And the problem is if you don't make the time, you hit the wall on scale. And eventually you get to that point where you sort of have to make the time, and it's not as easy as it was, when you were smaller. So I think it's hard to say that there's any, stage that you shouldn't at least be looking at it.
The only other quick thing I would add is, for those of you that are doing everything end-to-end yourself, implementation is costly, time-consuming, as is tax management. So again, right, like that's not necessarily thought of as traditional investment management, but in the world of what's happening with separately managed accounts and models, it's an important consideration.
I mean, I'll just throw in what I think is not a good reason, which is, hey, I already have someone that does this, so why would I outsource it? I mean, to me, that's a free body to evaluate the options to outsource and maybe bring a solution on board. So that's I think, a consideration that I sometimes hear for why people don't do it.
Yeah, because maybe you could be doing it better or in cooperation with someone else. Final question here, and then I think we have to wrap it up, which is, how do you think about scaling and outsourcing in a world where the next generation is no longer following the linear life path, thus making it harder to streamline?
It's an
Interesting
awesome question. Whoever asked it, I love that question. I'll throw in the first thought, like, it's actually, in my mind, even more of a need to think about scaling because your jobs are getting harder. 100% your jobs are getting harder. It's not a linear life path. A lot of the financial planning, as you know, this is an annual update at the least, and every time there's anything going on in the person's life. And so for you as the advisor to really be that person who guides them through that life path that can be very chunky, as we know, right? It's just not, it's like investment returns. It's a chunky, they're going through, everything's fine, and then something happens and boom, the entire financial plan is blown up. Outsource what you can and automate what you can so that you can spend the time and the focus on those moments when you need to.
And that's a broader statement. I would say from a product perspective, I think this is part of why the evolution continues to be where it is. So if you look at what studies around what advisors in general are looking to do over the next 5 years, mutual funds are expected to grow at 3%. Direct indexing is expected to grow at 4x that, at 12%. And yes, taxes are really, really important, and that's the main reason today that direct indexing is used. But I think part of this shift is going to be around that, right? Whether it's specific values or certain things that these clients are looking for because they care in a different way and customization's mattering more, I think that's going to be part of the growth of the SMA space in general.
Marlena, you get the last word.
Oh, I think a part of this too is just being able to scale across assets being more fragmented in terms of where they sit. So you absolutely want scalability from that aspect as well.
All right. Thanks to you all. Appreciate it. And thank you.
Thank you all.